Hi everyone, welcome back to my another tutorial. We'll integrate a few most popular technical indicators into our Bitcoin trading bot to make it learn even better decisions while doing automated trades in the market. In my previous tutorials, we already created a Python custom environment to trade Bitcoin. We wrote our reinforcement learning agent to do so. Also, we tested 3 different architectures, dense, CNN and LSTM, and compared their performance, trading durations, and tested their profitability. Actually, I thought that possibly there are no traders or investors who would be doing blind trades without doing some kind of technical or fundamental analysis. More or less, everyone uses technical indicators. So I thought, okay, if we can create a trading bot doing some kind of profitable trades just from price action, maybe we can use indicators to improve our bot accuracy and profitability by integrating them. So let's do this. First of all, we are going to be adding 5 widely known and used technical indicators to our dataset. The technical indicators ought to add some relevant information to our dataset, which is able to be complemented well by the forecasted information from our prediction model. This combination of indicators ought to give a pleasant balance of useful observations for our model to find out from. So you already can see that I'll be adding these 5 most popular simple moving average, Bolinger Bands, Parabolic Sar, MAST, and RSI indicators. First, I'm going to shortly cover each of the given technical indicators. To implement them, we'll use an already prepared TA Python library. I'll of course add a link in my text version tutorial. This library is used to calculate a batch of indicators. So if we'll succeed with these indicators with our reinforcement learning Bitcoin trading agent, maybe the future will try more of them. So I'll begin from the simplest, called moving average. It's an indicator accustomed to determine the direction of a current market trend, while not interfering with shorter-term market spikes. The moving average indicator combines market point of a selected instrument over a particular time frame and divides it by the number of time frame points to present us the direction of a trend line. The data used depends on the length of the chosen moving average length. For instance, a 200 moving average needs 200 days of historical information. By exploiting the moving average indicator, you'll be able to study levels of support and resistance and see previous price actions. I mean the history of the market. You'll be able to determine possible future price patterns. So I wrote the following functions here. Oh, it's too large here. So we'll use these functions to plot our indicators with OHCL bars and matplotlib help. So actually I wrote this function which I'll use only for demonstration because I wrote here 2 for loops which will help us to plot all the indicators we give to our plot OHCL function. So actually I'll reuse this function and I'm not going to explain this code line by line because, well, actually I already wrote a similar function in my second tutorial where I explained everything step by step, so you should only go to my text tutorial and go to my second tutorial and you can find all the information you need there. So continuing with this, we can simply add 3 moving average indicators into our data frame and plot it with the following simple piece of code with, I don't know how many there is, 50 lines of code. And of course, we should remember that we need to import TA trend indicator. And here is CMA indicator, which is used here. So actually, if I would run this function, well, actually we can run and it should plot us the data frame. So as you can see, after indicators calculation for our full dataset ended and it plotted us this 400 bars, I think, historical data of information, and it drew us this 3 simple moving averages. I think the one was fastest is 7 days average, second is 25, and the largest is 99 moving average. Well, it's nothing more to explain about simple moving average. There is plenty of information on the internet, so I'll move on. Next thing, indicator I would like to plot is Bolinger Bands, and actually it's a technical analysis tool outlined by a group of trend lines with calculated two standard deviations, positively and negatively, far from a straightforward moving average of a market value, however, which might be adjusted to our users' preferences. Bolinger Bands were developed and copyrighted by notable technical trader John Bolinger and designed to get opportunities that could offer investors a better likelihood of properly identifying market conditions. This could be oversold or overbought, and Bolinger Bands are highly popular technique. Many traders believe that closer the price moves to the upper band, the more overbought the market is, and the closer the price moves to the lower band, the more oversold the market is. So let's simply use this also simple code lines, and we might plot this Bolinger Bands indicators, and you'll see that it's quite everything simple. And I run this, and as you can see there in the middle is a simple moving average, very similar as it was used before. And at the two sides, on the top and on the bottom, there is another bands. And well, actually I won't give you any advice on how to do the market trades accordingly to these indicators. I'll just cover them shortly. I'll leave all the hard work for my reinforcement learning agent to learn. So actually we can move ahead, and now I'll close this, and I would like to talk about Parabolic Sar. The Parabolic Sar is a widely used technical indicator to determine market direction, but at that same moment to draw attention to it once the market direction is changing. This indicator also can be called the stop and reversal system. The Parabolic Sar was developed by J. Wells Wilder Jr., the creator of the Relative Strength Index. Will come later. So on the chart, the indicator seems like a series of dots placed either higher than or below the candlestick bars. Well, actually, I can plot it before explaining, except that here I change it from line to dot, so you'll see. Let's open it. On the chart, the indicator seems like a series of dots placed either higher than or below the candlestick bars. A dot below the candlestick is deemed to be an optimistic bullish signal. Conversely, a dot above the price is used to illustrate that the bears are in control and that the momentum is likely to remain downward. When the dots flip, it indicates that a possible change in asset direction is possible. As an example, if the dots are above the candlestick price and then they appear below the price, it could signal about change in the market trend. Well, that's quite logical seeing the chart. As the price of the market rises, the dots will rise as well, first slowly and then picking up and accelerating with the trend. The SAR dot starts to move a little quicker as the trend goes up until the dots catch up the market price. Well, actually you can see that. That's it about SAR, and as I said, we only needed to do one change in our main function. Instead of drawing us a line, we had to change it to draw us a dot. This indicator shows that it works quite well for capturing profits during a trend, but it can lead to many false signals when the price moves sideways or is trading in a choppy market. The indicator shows us that the best idea is to keep order in an open position while the price rose. Once the market starts moving sideways, the investor ought to expect additional losses or tiny profits, obviously. So that's about Parabolic Sar. I close it. Next on my list is moving average divergence indicator. I'll open the code also. This indicator is known as a trend following momentum indicator that shows the correlation between two moving averages of a market price. Default moving average convergence divergence is calculated by subtracting the 26-period exponential moving average from the 12-period exponential moving average. As a result, this mentioned calculation, we receive MACD line. The exponential moving average of the masked is referred to as the signal line, which is plotted on top of the masked line, which might operate as a trigger for buy and sell signals. Traders might do a buy order once the mask crosses above its signal line and sell the security once the mask crosses below the signal line. Moving average convergence divergence indicators are often interpreted in several ways. However, the most common methods are divergence, crossovers, and fast rises in line. So actually, I'll show it to you as before. There is a lot of ways how mask can help us while doing market orders differently from before mentioned indicators. This mask indicator will be plotted in volume subplot because it has different range while calculated, and we can plot in the price subplot. So it's a little different in the code. Actually, as I said, as you can see, we use AX2 indicator. This is my another subplot where I plot my indicators. So as a note, there are 4 of them. So mask is calculated by subtracting the 26-period exponential moving average from the 12-period exponential moving average. Actually, there's nothing more what I could explain about mask. So let's move ahead to our relative strength index function indicator. This relative strength index indicator is known as a momentum indicator employed in a technical analysis that measures the magnitude of recent market changes to estimate overbought or oversold conditions within the current market price. The RSI is displayed as an oscillator and might have a reading between 0 and 100. The indicator was originally developed by Sam J. Wells Wilder Jr. So traditional interpretation and usage of the RSI measure that value or higher than 70 indicate that a security is turning into overbought or overvalued and will be set for a trend reversal or corrective pullback as its value, and the readings below 30 indicate the oversold and overvalued conditions. So I will plot them and you will see, but there is one difference here that we can't see where is the 30 and 70 lines, but well actually we can imagine that it's somewhere here and 30 is somewhere down below here. As you can see in this chart, the RSI indicator can stay in the overbought region for extended periods while the stock is in the uptrend, and the indicator might also remain in oversold territory for a long time when the stock is in a downtrend. And this is a short introduction to these 5 indicators. There is not much more that could be told about them, but I don't want to expand to this because we won't do these trades manually. We want to teach our reinforcement learning agent to do them profitably actually. So up to this moment we covered all 5 indicators one by one, but we won't use these indicators separately. We'll process these indicators together with our market information and order information, and we'll send all this data to our Bitcoin reinforcement learning agent to decide what action it should do. But before doing that, let's look at how our indicators look when they are all plotted into one chart. To plot this graph, I wrote a new function called the plot OHCL, and I inserted them into our utils script folder, and at the end you can find this function. But for the main plotting I wrote another script called indicator spy. So here it is, indicator spy, that we might use to plot our all indicators to one plot with OHCL bars. So actually, as you can see, I add all of these indicators to my data frame, and here simply I plot it while calling a plot_OACL function. So actually there's nothing much to explain. I can run this and we'll see what we can receive. Now you can see the results while combining all indicators we covered into one chart. It can be assumed that it's possible to discover a correlation between the indicator and the price change, but if we aren't experienced traders, probably in the long term we're still gonna lose our money. So we'll send this technical information to our neural networks to find a purposeful correlation in between. If our bot gonna do more profit than in the previous tutorial, we can assume that these indicators are useful to use actually. So let's move ahead what I changed in my code. So moving back to my main script, we already covered how to implement these indicators to our dataset and how we can visualize them. Actually, we do all the same steps as we did with open, high, close, and etc. We shortly covered 5 indicators that actually have 9 parameters, 3 by moving average, 3 by Bolinger Bands, and 1 by each of 3 left. This means that we need to modify our model input. So before it had 10 input features, right now there will be 10 plus 9 input features. And if we go up to our model, where is my initialization? Let me state size. As you can see here, I commented this simple line and I added 9 and wrote a comment why we added 9 here. So because these indicators are already calculated and inserted into our data frame, it's quite simple to use them. Mainly we need to modify the reset and next observation functions from custom environment. So if I go to my custom environment and there is a reset function and there is next observation, and actually what I did, as you can see, before we had only this line where is market history, and I added another one line. So here's an indicators, and of course I created a new DQ list somewhere. I think here it is, DQ indicators history. And actually what we do, we take the same way as we here doing that, we were taking each step from our history. Here we do the same, and actually we normalize it the same way as before. But because before I was doing it here, I was normalizing it, I left it as it is, but I concatenate this indicator to our state, but I do here normalization instead of doing here. Well, because there is 2 different values, which I made it a little bit different. So I showed you already my another chart where it was this one, where I added all our indicators into it. And actually this is my full data set. And actually, as you can see, there is masked indicator that sometimes goes too high and sometimes goes too low. And actually I thought that, okay, I will simply divide it by 400 and then it will be in between -1 and 1, and this will be fine for us, at least for now. And later maybe I'll do, I don't know, maybe I'll do something different with it, with this whole normalization process. And actually this is the idea why I divide by 400, and there is an RSI, but because our RSI moves between 0 and 100, that's quite logical why I divide by 100. So that's actually all the huge changes I had to do. And of course you don't need to worry about yourself, you don't need to do this, because I'll upload this code into my GitHub and it will be open to use and download. So that's it about the code, and right now we can move to the training and testing part. And differently from my previous tutorial where we tested what's the best model architecture, now we don't need to test between all these models. We will simply train the same dense model with the same parameters and for the same amount of training steps, and after the training we will compare the results obtained for while running this model to the same unseen test dataset as before. So actually we can go to the end of code. Where's my training code? This code part doesn't change except that we needed to import the indicators at the beginning of the code, that we could use this line, so where we actually calculated all the indicators, and we process all the indicators and we simply add them to dataset. And other training steps are all actually the same, and same as before. I actually won't show you the training process because it takes some time, but of course I can open my parameters, and this is all the parameters I use for my training. It's actually all the same, and you can see how long it took to train. I don't know, it's about 16 hours, but actually we are here not about the training part but testing. So I'll upload these best indicators into GitHub. I don't use these old ones because, well, it doesn't matter for us. It only takes the space, and actually we can run the testings how it looks like. And okay, I here already linked it with a current model, and it should give me the results in a short time. And of course I won't run it for 1000 episodes, but I run it only for 10 episodes. So you can see that even for 10 episodes it's better than before. So we can check my test results, what were for 1000, and you can see that for 1000 episodes I made about $80 profit in a month, and we have only one episode that finished in a negative profit. Well, actually all other episodes were in profit. So that's actually quite impressive results. And I totally can say that yes, our indicators helped us, and they improved everything. And it's 8%, and I believe if I would run it for 100,000 episodes, it's probably even would be better, but this is not the goal of my tutorial. So actually I wanted to show you how it looks right now, so I'll write a true to visualize it, and I'll true here, and I'll show you how it looks, how our indicators looks while it's running. So I'll begin, and you'll see how beautiful it works. It's sad that I can't make it larger, but doesn't matter. You should catch an idea, and it plots quite slowly because there's a lot of information in this plot. There's a lot of indicators and so on, but let it show the beauty. Actually, that's it will be for this part, and my goal was to prove you that indicators should help us to get more profits and to make better trades and so on. And including this tutorial and previous ones we had in the past, we really defeated a lot of challenges, and currently we can see that our Bitcoin trading agent really showing some kind of positive results that we can achieve. Of course, there is still much that could be done to improve the performance of these agents. However, this requires a lot of effort and time to develop and do experience with these changes. Every new tutorial on this topic takes more and more my time, and there is nothing I can do. Only motivation is that I see positive results, and I have proved that artificial intelligence can be used while trading Bitcoin profitably actually. Up to this point, during all previous tutorials, we were training and testing our agents with the same historical data. But I think everyone is interested in how this bot would perform with more training data and with the current Bitcoin price actually. So to solve this, I thought that in the next tutorial, I'll do about how to download historical data from the cryptocurrency market and do the training with a bigger data set. And Of course, because we'll have much more training data, we might face a problem that our training might take days, not hours, so even weeks. So I'll try to solve this that we could run multiple simulated trading environments at once, for example 16 environments, so that we could spend less time while training. And this will be done in multiprocessing. Well, actually, I haven't done this already, but I'll do. So more about that in the next tutorial. And thank you all for watching. Thank you for following me. I hope you like this content, so you could smash the like button, subscribe my video, share it, and mark the bell button, so you'll know when my next tutorial will see the daylight. So again, thank you all for watching, and see you in our next part. Bye.